Shannon from Alphatrends.net. Today is Friday, the 1st of October 2021. We had a nice change of pace from September. The market did have a negative week for the most part. You can see Biotech's got hit again today, and they were down close to 7%, which is why we don't buy the dip. But we'll talk about that in a moment. Let's look at the charts here. S&P 500, if you watched Wednesday's video, I was pointing out this volume-weighted average price as the likely level that this market was going to drop down to. Today, we got very close to that and did get some intraday bounce. There's a couple things to note on this daily chart. One, we are seeing this market for the first time in a while with the 20-day moving average below the 50-day moving average. The 50-day moving average will begin to decline on Monday as well, because that's 51 days ago right there. So that will get averaged into the equation. So we're going to have a declining 20 and 50-day moving average. Now that doesn't mean the end of the world. Last time we saw the 20 below the 50 was right here, and that did lead to a little bit of selling. But 20 below a declining 50-day moving average was back in February of 2020. I'm not saying that's going to happen again, so don't misread and don't say that I'm looking for the end of the world here, because I'm certainly not. But there's reasons to be cautious here when we look at the declining 20-day moving average, the declining 50-day moving average, and we got it right up to the declining 5-day moving average today. So we're not really out of the woods. We did see a quick shakeout below this prior low. That's, as I mentioned Wednesday, how a market often turns in the short term, and we got quite a powerful rally off of that. Now, where were we 5 days ago? Well, this was Monday, so next Monday we'll be averaging this out, which means the 5-day moving average will continue to decline, something along the lines of this. Now, what would be best for the market next week would be, maybe people get excited over the weekend, it pulls back on Monday, and then we see that 5-day moving average flatten out, and then perhaps we could see a little bit of resistance that's formed here be taken out to the upside. We could call this a shoulder, a head, and a shoulder, and then perhaps that would measure us back up towards 445. It's one scenario. It's certainly not a prediction. What we're going to want to keep an eye on to see how it progresses, though, is the volume weighted average price from today. That is where we made an important low. We could do it off of the low itself. I like to give it a little bit of extra room and measure from the beginning of the day where I set that anchor. So I think on Monday, we'd like to see that the market holds above whatever this 2-day volume weighted average price might be. So it might end up looking like that. Maybe we even come down, undercut it a little bit, but if this has an upward slope to it, I think that will be encouraging. So we've got mixed messages. We're at a potential area where this market could turn back higher again. But again, the problem is that with the declining 20 and 50-day moving average and the volume weighted average price off of the peak up here, let's just color that red so we can see it a little bit better. This makes the volume weighted average price off the peak, the location of the 20 and the 50-day moving average, which are declining, makes this area in here a potential area of resistance if we do rally up towards there. So be aware of that if you see continued action, again, maybe a downward day, something like this, it seems like this is the area of potential for supply to be released back into the market in the S&P 500, or it can maybe, rebuild and continue higher to new all-time highs. I don't know. I don't predict. I just take it one piece at a time. I'm aware of the key levels, and the fact is, if it gets up towards that level, that's time to let off the gas a little bit if you're buying into weakness. We also discussed in the Nasdaq this volume weighted average price from the May low, and we undercut it slightly here today, but that's exactly where the bounce occurred. Same story here. We have a declining 20-day moving average. We have a 50-day moving average that will start to decline on Monday. This was 51 days ago. I always keep a vertical bar there so I can adjust it forward one day, and then it tells me this is what we're getting rid of on Monday. So as long as we're below that, the 50-day moving average will be declining. Again, it's not the end of the world, but we haven't seen the 50-day moving average declining. Actually, it was over in here, and that certainly didn't hurt the market. In fact, it trapped the sellers in there. So just be aware of the key levels. We've come down pretty hard, pretty quickly, and certainly some further bounce seems likely. The volume weighted average price off of the peak in this market, the Nasdaq that is also right up near the 20 and the 50-day moving average, making this a key level of interest next week. That if it rallies up towards that level, it seems highly likely that it would at least stall there before it might be able to continue to move higher. And in that case, we'd see the 20-day moving average flatten out. The 50-day moving average would then, we'd be getting rid of this data. The 50 would be flattened out. So it's certainly possible that this has been the low, but I don't have the confidence to say it yet because we're below the declining 5-day moving average. We're below the volume weighted average price for the week, and you can see how well that held. Keep in mind also the prior week, we gapped down on a Monday. Tuesday, that volume weighted average price for the week held, and then this week we of course gapped lower, and that volume weighted average price held as resistance. So same story in here. Put a volume weighted average price off today's level because that was a low, and you can see how we overcame that volume weighted average price, tested it, and then rallied up to the week to date volume weighted average price. By the way, if you're confused about these time frames, just look up in here. You can see this is a 15-minute time frame, and I've got a 5-day moving average. All the labels are on each time frame that I look at. So a possible scenario, bullish scenario for Nasdaq: one, it gaps up, gets people excited, and then starts to pull back, maybe something like this. It looks like the 2-day volume weighted average price might end up be a level to hold. We get rid of this data from last Monday. That gets the 5-day moving average flattening out like this. The volume weighted average price comes in like this. And then what happens? Well, then we're in a position where it could break beyond this little band of resistance, take out the volume weighted average price from this level, and then continue up perhaps towards that volume weighted average price from the high, which again is where the 20 and the 50-day moving average are. So in other words, we have a potential bullish scenario setting up. The ideal scenario would be weakness on Monday, followed by buying Tuesday, into Wednesday, Thursday, up towards this 365-ish level, 368-ish level in the Nasdaq. Russell 2000, it's just range bound. It continues to be a waste of time. Why bother talking about it? Semiconductors came right down to the volume weighted average price identified on Wednesday. That was the volume weighted average price from this low right here. Today we undercut it slightly. It's been an important volume weighted average price the last 2 times it was tested as well. Now this market, what's going on? It's a little bit weaker because you can see that we're still below this prior low, whereas in the Nasdaq we're back, kind of right at that prior low right here, and for the S&P 500 we're well above that prior low. So the semiconductors are underperforming a little bit. I would be very careful with this group. Again, put a volume weighted average price on today's low. Perhaps we see a pullback, rally up something like this, get up towards this prior level, and then another pullback, and then perhaps it could get going. It's not likely that it's just going to continue to move straight higher. This is why we don't buy dips. The Biotechs, I discussed this on Wednesday as well, saying, I thought because the 50-day moving average at this point was advancing, it was likely it would continue to move back higher, but I wasn't going to buy it until it showed evidence of trend alignment that the intermediate term, shorter term time frames were moving higher. Said that it's possible we could come right down into this range. The volume weighted average price year to date and the 200-day moving average. That's exactly where we opened and closed, in that range today. But again, the 5-day moving average is declining dramatically. We still have a pattern of lower highs and lower lows. The week to date volume weighted average price acted as pretty much perfect resistance in here this week. If you're not looking at, every week I talk about the week to date volume weighted average price for a reason. It works. If the biotechs are going to turn around, same story. Let's see if maybe they can come down, shake some people out, even undercut that 2-day VWAP on Monday, and then spend some time, working through this level. It's still guilty till proven innocent. I wouldn't be a buyer in here. If they don't scare you out, they'll often wear you out. The financial stocks, they also came right down to where they were supposed to, the volume weighted average price from the July low. And look at how it nailed it and closed right on that level on Thursday. Today we got the bounce there. We got back up to the 5-day moving average. This was also the volume weighted average price from the prior Monday's gap lower. I think that if we remain above 37.50, you generally want to give the benefit of the doubt to the buyers in the financials, and don't be someone who chases after big moves. The people who chase and look for these breakouts, they're the ones who end up spitting it out each time. If you're looking for a breakout, you're looking for it to rally up, create a higher low, and then buy the breakout. That way you can manage your risk much more effectively with a stop here instead of way down under here. Energy names were stronger. They did not consolidate further, so the buyers are there. The strength is in it. Today in Alphatrends, we bought MCF and PTEN. I hope you have a good weekend. That's it for me.